Good evening, and thank you for joining us, and welcome to the third year of our webinar series, Inspiring Ideas from Experts in the Field. The webinar is a new workshop format for NOFA Mass, and it's our hope that we can make quality farm management education easily accessible to everyone, anywhere, at any time. My name is Anna Gilbert Muhammad, and I am the Food Access and Webinar Coordinator for NOFA Mass. My email is anna@nofamass.org. Feel free to contact me with questions about this webinar, webinar suggestions, or with any food access program questions you may have. Now, before we start tonight, I would like to thank our sponsors, Frontier Natural Products, Lancaster Agriculture, and UMass Risk Management Crop Insurance Education Program for supporting the production of this series. I would also like to thank New Entry Sustainable Farming Project and Tufts Friedman School of Nutritional Science and Policy for providing access to the WebEx software we're using tonight to host this workshop. Also, many thanks to all the NOFA Mass staff and board who have assisted to make this workshop possible. And if you're not a member of NOFA Mass, please consider becoming a member, joining to support our education and policy work. You can visit our website to learn more. Tonight's presenter is Amy Shapiro, Business Development Director, Franklin County CDC, and the Western Massachusetts Food Processing Center. Her topic tonight is financial literacy for beginning farmers. The format of this webinar will be a presentation with a question and answer session to follow. Now, a few housekeeping rules or guidelines. You can type in your questions using the chat button, which is located at the top right-hand corner of your window. And to open the chat screen, to type your questions at the bottom. So when you open your chat screen, you can type the questions in and I will see them. For those who are listening by phone, you can also send your questions to me via text. My phone number is 413-214-1237. To practice the chat feature, I'd like to invite everyone right now who is listening or viewing this by computer to type in their name, their farm or business, whether they're watching this with additional people, and why you're interested in this webinar, and that would be greatly appreciated so we can make sure everything is working. Lastly, as you come on, or if you're on now, if you can place yourself on mute, that way our presenter has the full access and it doesn't interrupt our presenter as she's giving out this wonderful information. So without any further delay, I'm going to turn over the presentation to Amy. And Amy, the floor is now yours.
Okay. All right. I don't know who. Can you hear me?
I can hear you.
Can they hear me? Not yet. I'm the presenter. I'm not the presenter yet.
Okay. This is the other one.
So, so they can hear me, so I can start talking.
Yes, she can.
Okay. Hi, everybody. Thank you, Anna. As we get converted over to my screen, I just want to say that I'm really thankful to be able to share this information with you. The Franklin County CDC has been around for 38 years, assisting small businesses to start and grow with counseling, training, business lending, and commercial space. And we're also home to the Western Mass Food Processing Center, which is a shared use commercial kitchen here in the Greenfield area. The PD Grows Investment Fund assists farm and food businesses through the community investments. We have local people who are investing their money into a fund that we can lend out to farm and food businesses. The reason why I'm talking with you today is that, I've been working here at the CDC for 17 years, helping business owners start and grow and obtain financing. And before that, I owned a business for 25 years, so I really understand the issues around work-life balance and starting and growing a business, financing, managing employees, and then succession planning. So with my MBA and my family business experience, I've been able to share that information and my goal is really to get to the basics of what people need to know, because business is complicated and it's risky. And for your beginning farmers or beginning business owners, it's really all about minimizing the risk and having, let's see if I can do this. Let me just take one chance. So Anna?
Yes, you can, you may have to shut down one computer.
I'm going to share my screen. Let's see if this, yep, now we're on. Okay.
Okay.
Great. Okay, here we go, guys. So, a little bit about me. I just got in there. So tonight, what we're going to talk about is understanding personal needs and goals, fixed and variable expense assumptions, income and expense assumptions, financial statements, lending. Your personal financial needs are. You need the business, how long it's going to take for the business to cover your personal needs. So identifying your monthly expenses, understanding what financial changes might happen in the next 2 years or so, and building that into your overall plan, and determining, where your health coverage comes from is important. And sometimes, as you can see from this graph, that it might take 3.5 years to make enough money to cover your household expenses. So unless you have money coming in from other places, it's all part of the picture, and understanding when the best time of going into business is. So, do you have farm income? What's the monthly income? What is needed to cover all those personal expenses? And then you start transitioning to the business and say, okay, what are my fixed monthly expenses? What are my variable? What's going to be different? What are the actual costs to produce my product? What'd you do here? And what's my pricing strategy? Oh, you lost me here.
I'm sorry.
I got to go back to share. Okay, here we go. We're back on track. Okay. And then the important part is as you're gathering all this information, you need to figure out what your pricing strategy is and what the cost for needed capital equipment is. Now, this is just like this business plan model canvas that's very popular right now. It's really something you put on your wall, and with stickies, you can move things around to try to identify what the overall scheme of things is. Because in order to come up with a financial plan, you need to answer many, many questions. In order to have a financial plan that's realistic and close to your expectations and assumptions that will happen. So start with your unique value proposition. What's unique about you versus other businesses? What's the problem you're trying to solve? It might be trying to reach a certain neighborhood. What's the solution to that problem? It might be maybe selling through farmers markets and local stores might give you access. And a key metrics would be, how are you going to measure whether this is working or not? And for an example, it might be just tracking sales, tracking number of customers. What are your unfair advantage? And you might figure out that an unfair advantage that makes you even special is that you're known in that neighborhood, or you have a reputation and that other competitors might not have. What are your challenges? You might not have a tractor. And what customer segment are you going after, which might be families, working people, maybe the elderly, that you're really trying to serve that market. And then at the bottom, your cost structure. How are you structuring and tracking the data? So it might be broken down to administration or just the operations, direct labor and wages, repairs and maintenance. And then the revenue streams are, where's the money coming in from? You might have CSAs, you might have farmers markets or retail stores. So it's a good model to use to help you focus. But it all comes down to your assumptions. You've got ideas in your head and you've got to make them understand, you've got to figure out if they're real or how real they are in the spectrum. So I'm going to give you some examples. So for revenue, an assumption might be that you're going to sell at a CSA or farmer's market, right? Wholesale or farm stand. And so that's just, we'll get to that later in more detail. You have to determine your cost of goods for the product. What's it going to cost? What are the costs directly related to the cost of making that product and or the cost of an item that you're going to resell? Having the detail to that will be very important. And the expenses, like I said, fall into these various categories that you can capture and then evaluate the direct operating or what the occupancy costs are to being in your location. Now, basically, revenue assumptions are as good as the market research that you do. It informs your thinking, and the better the information, the better your realistic assumptions are. So, for example, a CSA revenue stream might be based on how many members in the first year or second year or third year. If you say 400 in the first year, how realistic is that? You really want to do a lot of interviewing, test marketing and getting out there to capture data to say, okay, I think maybe 50 is realistic in the first year and maybe 20% growth in the next year. Like, what is real? Because if your numbers aren't real, it's even harder to build a business around it. Now, for farmers markets, that might be based on your assumptions on how many markets you're going to do, how many months, and what is the projected average income. You're going to make $250 per market. You can make a $1,500 per market. And how are you backing into those numbers? Is it that you think that the average person will spend $25, and you know that because you've gone to markets and you've watched what people buy and you've figured it out, or you've talked with other market members? It's all based on, trying to honing in on what's real. So you might have a few retail stores that you wholesale to. How many stores do you think is reasonable? And have you talked to them to back up whether they're interested in buying your product, and how much would they buy per month and what months, so that you can build some kind of revenue stream on selling to that store and also preparing how much you're growing to sell to that store. And if you have a farm stand on your property, are you going to be open every day, just weekends? What's the average number of customers? And how much do you think they will spend per month? It's all, based on whatever you can pull together. And that's a whole nother topic. Developing a realistic assumption for your cost of goods, which is the variable cost directly related to the cost of making that product and or the cost of selling an item you're buying from somebody else. It includes seeds and soil and trays, bags, the packaging material, animal feed, labor to start seeds, water, mulch, packaging, all this stuff. So calculating how many rows you're growing, how much it's going to cost for the soil and getting that soil ready, and the time it takes to prepare that soil. to all the variables to getting that product out of the ground and into ready to be sold. Those are all costs directly related to growing that product. Direct operating falls has under labor, wages, payroll taxes. So if you work for somebody else right now, your employer is taking money out of your paycheck and matching what you're putting into Social Security and Medicare. So, as a business owner and you're paying yourself, you're going to be taking out like 15% because the employee is putting in 6% and the business owner matches it by 6%. So as a business owner, you want to be thinking about the cost of wages as well as the cost of payroll taxes, because down the road, you want to be collecting Social Security. You need, as an owner, to be able to put money into that. But that's a whole nother topic. So considering direct operating expenses also includes occupancy, like rent, utilities, phone. Those are monthly expenses that you can bank on. That's going to happen every month. They're fixed. Administration, like supplies, and maybe you hired a bookkeeper who comes in once a month to do the books. That the bookkeeper is fixed, but the supplies, you have control over whether you're spending $15 or $30 that month. But understanding what your supplies expense will be helpful. And another category, repairs and maintenance. Everybody has things break down, so you might want to put money aside each year to cover those kinds of expenses. So all of our expenses break down into fixed and variable. So fixed, like rent, utilities; variable, like labor and wages, because you might have a part-time person that then turns into a full-time, or you might have a full-time that turns into it all depends on what your plan is. And repairs and maintenance, that's variable because it all depends. I want to turn your attention to kind of the next phase, which is understanding your pricing strategy, which then feeds into your overall budget. I have here a chart with price, low, moderate, and high price on the left, and low, moderate, high quality on the bottom. And I like this because it helps you position where you are in the marketplace. So, for example, think about all your competitors and where they are. Are they selling moderate items or high-priced items? And where are you in the scheme of things? And if you say you want to be in B, moderate price, moderate, little bit higher quality, then all your marketing materials and everything you do about your business should be focused right there to deserve that important real estate. It's important to know where you are with everybody else. This is an interesting exercise, understanding what your goals are. And I lay it out here pretty straightforward. In goal 1 would be revenue sales. What do you expect and assume your revenue sales could be in year 1? I have here $30,000, and that 30 is going to come from retail sales with 5 farmers markets. Assuming I get 1,000 each market, I'll get $5,000, and wholesale from 10 accounts to equal 20,000, and 50 CSA members paying $100, I'll get 5,000. So if I can do that, I'll get my 30. But in order to do that, I have to think about some other strategies, like my marketing strategy. How can I reach so many customers that some of them, a certain percentage of them, will be my reoccurring customers that I can rely on? And what's my strategy to reach those customers? And then goal 3 is, what's my operation strategy? How can I reduce waste so that I can have more profit? And that helps my equation. And then my long-term, another short-term, is my financial strategy, which would be to have 20% of my net profit at the end of the year, because that 20% net profit would then be able to be invested in the business next year. So again, this is using measurable goals measurable objectives that we can track as we go forward. Looking at a financial plan, you got this pie here that you're going to cut up to figure out how it all is going to work. So you've got your cost of goods that you want to have a place. And I always call it a third, a third, a third, as just a general way of thinking. If a third is your cost of goods, the cost to make that product, and a third is your fixed and variable expenses, then what is that last third? The thing called profit. And it would be really nice if you could have a third of this whole picture being your profit. You may not have any profit in the first year, but it may be a goal to try to build in that profit over time. But if you understand all those expenses, you'll be able to move into making decisions. So the cash flow projection, with all this information from this work you've already done, is a 12-month view of your income, your cost of goods, your cost of goods is subtracted from your income to show you your gross profit. What's left, your gross profit is what's left to pay all your expenses. And then at the end, you've got your net income. And then if you have a balance at the end of each month, that will give you a perspective on if your income and expenses are in line to give you a positive or a negative. And then if it's a negative, you can make adjustments to get a positive. And if you have a good, healthy ending balance, you're bankable for a loan. So here's an example of just April to November. Actually, I had December in there, but it got cut out. Cash flow. Now, we've got the farmers market numbers that we talked about. This is where the $5,000 is going to fall in. We've got the wholesale accounts for $20,000. We've got the CSA. Now, all the CSA people are going to pay in June, and then they get all their benefits throughout the rest of the year. And then we've got cost of goods. Now, we're making an assumption that our cost of goods is 35% of what we're selling, of our retail price. So I made a calculation that's taking 35% out from the revenue above. And our gross profit is what's left to pay our expenses. So this example shows you that we've got rent, insurance, advertising. I just put a few of them in that we've already talked about. And overall, you see the business is making $30,000 coming in, $10,500 for the cost of goods, which leaves $19,500 to pay everything else. And when we look at these expenses, we see our total expenses is $25,786. There's a problem here. We don't have enough to cover our expenses. So here's an opportunity to do some planning. We haven't spent any money yet. This is all just, as we call, pencil engineering. To say, okay, I'm $6,286 short. How can I make this adjustment so that I can balance? It might be that I need a few more CSA members. I need more revenue. And I might spread that and try to sell more at the farmer's market. I might try to reduce my wages. I might, instead of 2 people, I might have 1.5. So there is a balance here that helps figure out from the beginning whether you're going to be profitable. And if you're already in business, this is a great tool to say, what happened last year and what are my assumptions going forward so that I can turn things around? And how can I measure over time each month with looking at these numbers every month to see if I'm on track? And what do I know today that I didn't know yesterday? So coming back to this cash flow chart shows you the movement of cash over time. And that's a really helpful tool. What I like to do and I find really helpful is to take all the information on the left, farmers market, the income that's coming in and the expenses going out, and copy it at the bottom where it says list all assumptions below, and in words write out what will happen. Like farmers market assumes 10 markets at $1,000 a month from blank to blank, or CSA might be, so many CSA members. And then when I get down to rent, it might say rent assumes $500 a month, but we're getting a break this year for $100, and then in year 2 we have to pay $500. But it means that anybody looking at this cash flow will automatically understand what the numbers are, and when you forget what those numbers are tomorrow, you'll understand how you came up with it. So again, it's really important to put all these words at the bottom so that it's very, very clear. So moving on to financial statements, they're used to understand profitability, what happened in the business, how to predict the future, and to be used to file taxes. The 3 most popular ones are the cash flow projections, which I just talked about for budgeting and for planning, and then the income statement for looking at the profit and loss and what happened in the business, and the balance sheet, which is the business value. It's a snapshot in time to see what the value is. The income statement in particular describes activity over time. We usually use them on a monthly basis, quarterly, yearly. It helps track. It's one document that tracks everything and compares one time period to another. It's very, very helpful. Depreciation is usually on that, and it's a non-cash, and so it just helps you understand what your depreciation is. And I already said it comparable over time. Now the balance sheet is an interesting statement, and it's the most misunderstood, I think. People are challenged by it, and it's very simple. It's basically what lenders want and what you want to know. You want to know what the value of your business is, and you need to use it for your cash management and to see and to track these behaviors. So a balance sheet has the assets, which is what you have. You've got cash, you have inventory, you have equipment, and you have property. And all that added up are your assets. They're bankable. They're collateral, actually, is another way to look at it. Liabilities are what you owe, your accounts payable, credit cards you owe money on, bank loans, lines of credit. So if you take your assets and your liabilities, it equals what your equity, and the equity is what you own. So you're really subtracting out your liabilities because that's what you owe people, and what's left is what you own. So it's your investor's equity, it's the owner's equity, and it's the net income, which could be just cash, liquid cash in the business. Most people do provide balance sheets at the end of the year, so you have a year comparable, and they'll use it to share with a lender or an investor. It's really important to maintain accurate records, right? Everything we've talked about so far is all about numbers and what those numbers mean, where they came from, doing good market research so that you can feel confident that these numbers are obtainable. So, I can't stress that enough. Creating invoices with each customer, with the date sold, the amount per item, contents of what was sold, and payment terms, and keeping a copy of every invoice helps you make sure that you're tracking the right expenses and income, and also looking at evaluating your customer base and their purchasing patterns. Good records prevent bank fees and bounced checks. So when we see a business that has a lot of bounced checks, that's like a tip-off that says That's money that should be invested in their business. It's money that they're not able to use in their business. So how can that be fixed? QuickBooks is a structure, an accounting program to maintain information. I'm sure most of you have heard about it, and if you haven't, it's something to check out. And it's pretty easy, fairly easy to learn, and everybody is familiar with it, so you can get some support in helping you figure that out. Now, if you're looking for a loan for a tractor or land or whatever, there's different criteria that you'll be measured against. Lenders like to determine whether it's a grant. You still have to have the same information. It's your credit history. What's your credit rating for the business and for the owner? Wait a minute. I'm sorry. They want to see your credit history, and the credit rating helps them understand what your credit history is. But how you are personally will also reflect how you are in your business. What your character is. Do you have the ability to run the business? What do you have for collateral? Is there collateral that offset a loan? And what is the business sustainable? Is your cash flow projection realistic? Is your plan and your assumptions realistic that make sense? What's the loan for? How much do you need? These are all standard questions that if you were lending money to somebody else, you would be asking the same questions. There are different places to find financing. Suppliers that you would be buying from might give you terms, like if you're buying seed, you might get 90 days or 60 days before you have to pay it. There are traditional lenders, there are alternative lenders, there's customer deposits like CSAs, people pay first, and there are grants. So these are just a few. There's crowdfunding, which is gaining lots of traction. Now, for alternative lenders, for non-farm lenders, the Franklin County CDC, the organization I belong to, we have a loan program, and we lend to all kinds of businesses and food and farm businesses. We have different loan pools that we pull from. PV Grow's investment fund is another fund that we manage, but it's wonderful. We've got local people who invest in farm and food businesses. They want their money to stay local and to help foster the farm and food sector. And there's information online. You can find more about them. The CARE Project is a statewide project that does classes and workshops and also provides loan funds for farms. Farm Credit East, USDA, you probably know about these, other great agencies that have lots of opportunities for farm and food businesses. And Common Capital is another alternative lender. It's a little repetitive, but this is just, I can't stress enough how important it is to make yourself available to all these resources that have free or reduced funds, fees to help offset trainings and workshops and one-on-one technical assistance. This program is a great example, this webinar, to get you information and connect you with other resources. There's so much out there, and it's for your taking and enjoyment in building a better business model. Now, this is my kind of big picture of, as a farm, you're just not a farm in a small town or in a certain community. You're part of a larger ecosystem, and there are all kinds of things changing around your world, whether it's sociocultural, political, the economic environment, technological, and those things are changing all the time. We're seeing it politically, and that those things, decisions will be made that will impact your business. And it's for you to be aware of those factors can help you be nimble as things come up. The blue circle is really all the big picture things. You've got lots of different media markets to choose from to market your business. You've got lots of customers, many competitors, some of which you're not even considering as competitors. They're alternative choices to your customer. You have many, many different suppliers to buy seeds and grain and all kinds of products from. Who is the best one for you with the best price, the best quality, the one that you can work best with? You've got so many decisions to make. And then the yellow circle is the planning circle. Somewhere you're on that circle somewhere all the time. You're preparing for the future by planning right now. You know, you're planning a budget, but you've got to implement the plan and make and act. So you've got to learn some things. You've got to make it, you know, figure out what you're going to learn, and then something happens and you review those results, and then you measure the results and you record them, and then you compare the results and analyze them, and then explain them and evaluate them, and you're back at the top with all things you knew today that you didn't know yesterday. Businesses fail because they stop on that wheel somewhere. And so as a business owner, your responsibility is to stay nimble and current and really understand how you can be better, stronger, and grow your business. And good data helps you do that, especially when you're looking at a financial plan. The inner circle, the blue, is really looking at what you're selling, what product or service you're selling, the price you're selling it at, how you're promoting it, and what is the location, whether it's a farm store or a farmer's market. And then the target customer is in the middle. It's the center of everything, because that customer has to engage with your price, your quality, and how you do business. So I like this as a really good reminder of the big picture and how all these things are moving targets, and to keep your eye on it. So there's some resources to help. PV Grows, I mentioned. Here's the website. NOFA has a February 27th soil testing workshop. The Carrot Project, check out their workshops. They're wonderful. They've got a really good class for beginning farmers. Julia Shanks Consulting works for them, and she teaches their financial management workshop, which is a business plan workshop over like 3 months. She also does private consulting through the Carrot Project. She has a book called The Farmer's Office Book. It's a really good book for understanding financials and trying to make sense of this topic. And if you're interested in building, developing a value-added product that you'd like to grow on your farm but turn it into a sauce or a jam or something, you can check out our Western Mass Food Processing Center and learn about creating a value-added product. And we have monthly info sessions on that. CISA is Community Involved in Sustained Agriculture, is our Western Mass, our Pioneer Valley Buy Local program, and I think there are various ones around the state. And Mass Department of Ag has workshops and grants. So, I mean, there's so much out there that is available to you. So I'm happy to answer any questions that you have. I think that the importance that I'm trying to convey to you today is the importance of keeping data and the importance of numbers. Setting up good market research, capturing good information, and tracking it in an organized way. I think that I see businesses fail and struggle because they didn't take it serious. I've had many businesses who've said to me, I've asked them if they could do it over again, what would they do differently? And they would say, more market research. I got too excited about what I was learning and should have gotten a little bit further. And then other people would say, my numbers weren't as realistic. I was still really pie in the sky, my ideas, and I wasn't as realistic as I should be. It's really important to under-promise, over-deliver. Like, be, say that you're going to have fewer CSA members and be excited that you got more and not set too high of a bar, and see if you can develop a business based on financials that provide you the information you need to make decisions and also are realistic. So, this is a big topic, and there's lots of formulas for determining cost of goods and figuring out what your profit should be. If you want a $10,000 profit at the end of the year, how are you going to do that and scale up? There's lots of resources to help you do that. And so I just hope that you understand that this is not an easy topic to just put in 45 minutes, that there's a lot to it. But I hope that I provided enough information to get you started on capturing information and doing some good research.
Okay.
So if there are any other questions,
Wow.
I'm happy to answer them.
Well, thank you so much, Amy. This is a great topic to start the year off. 2018, as first we enter into the tax season, and it's that time when people start preparing. So thank you so much. And I really want to encourage everyone to take advantage of the workshops that Amy has listed here on this slide. And then she has her email address if you want to talk about some of the workshops that PV Groves puts on and the Franklin County CDC. So I just want to get right into the questions, because I do have one that's coming from a viewer already, as well as some others that were text. And just to remind everyone, you can either use the chat feature, which is located at the top right, or you can text me directly at 413-214-1237. So I have a question here from Diane. It is in reference to QuickBooks, and her question is there QuickBooks training for those who may have some experience with it already? In her example, for example, QuickBooks for advanced beginners.
Right. It's a good question. What I encourage people to do is, hopefully you might have a CPA that you work with, and that CPA has a bookkeeper in their office. You could spend less money and talk to that bookkeeper, and they could, because they're working with you already, or if not, it's good for you to have a relationship with a CPA, have that bookkeeper show you, specific to you and your business and what you're trying to learn. They can help you resolve some of these issues and questions and help you expand your knowledge about how to use QuickBooks. It's a very powerful tool, and you get what you need out of it. And then when you're ready for other questions and you've got other problems, you can always go back to that bookkeeper who can address it. There are classes and workshops out there in the general public. And actually through the project, I believe there might be a QuickBooks class. But again, they're probably, general, and it all depends on what you want to learn. So I would say, to answer your question concisely, if you've got specific questions, go to a bookkeeper and that you can tap into whenever you need. And if you're looking for just general, how do I do all this stuff, take a class, and that'll give you a really good foundation of kind of how to use it as a tool.
Okay. And on that note, someone just sent in, Ms. Jean Rogers sent in a quick little note that Julia Shanks also offers a farmer-specific QuickBooks program. So that information is also out there.
Mentioned, which is what I mentioned on the Carrot Project.
Right.
Kind of
exactly.
Same thing.
Mm-hmm. Yeah. From David, and thank you, Diane, for that question, and thank you, Jean, for the information as well. From David, he has two questions. What exactly are grants, and how do they work?
What was the first part of that?
What exactly are grants?
That's a good question.
Mm-hmm.
So grants are money that people you apply for, and if you are successful and receive those funds, you don't have to pay it back, but you do have to provide appropriate reporting and spend those funds exactly how you said you were going to spend them, because they will check you and audit you. So grants are funded by state and federal and foundations and all, different kinds of philanthropists who would pool a pot of money in a location and be able to, because they have a mission to support certain entities like farm and food businesses. And so, there are different grants out there for different sectors, and farm and food has some grants, like USDA, I believe, has some. You could, work to create a business plan and a financial model, and you tell your story really well and realistically, and they, you can compete for those grant funds. And if, like I said, if you're awarded, you have to do exactly what you said you're going to do. And if you can't, you have to justify why you made a change.
Okay. Thank you, David, for that question. And I have a follow-up question to that from someone who texted this in, actually. And it's in reference to grants and foundation and donations. How do donations and foundation money and grants factor into the development of your financial records?
You meaning, if I understand this right, if you receive grants or money that you don't have to pay back, how do you reflect it on your financials?
Yes.
That's the answer. So how you would, in that revenue stream at the top, if I go back to, if I go back to where revenue's coming from. Oh, come on, I'm trying to get to this. It won't let me go. Yeah, there it is. So see up here where I have farmers market, wholesale, CSA, you could put a line in there for a grant that came in, or a loan that you got revenue from. And that shows that money's coming in, which month, how much, and then it's reflected in the overall plan so that you can understand how the cash is moving through the business. So, and at the bottom, you would reflect, you'd say grant funds from such and such, one-time revenue stream, blah, 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 But you definitely want to reflect that income so that it tells the story accurately.
Okay. Another question that has come via text. Are there any time when a cash sheet or balance sheet might be required for amount of time less than 1 year?
Oh, yeah, absolutely. Good question. Balance sheets typically are done at the end of the month, end of the quarter, end of the year. But, on any day of the year, if you want to see what the value of your business is, and it's a snapshot in time, you can run that report. Remember, a balance sheet is a snapshot in time. It's the value today. It may not be the value tomorrow because other transactions happen and affect the balance sheet, but it's a snapshot in time, any day, and you can compare it to another balance sheet at another time.
Okay, excellent, excellent. And thank you to that caller for that question. From Sarah, she sends in a question. Are there specific strategies for doing market research that work particularly well or poorly?
Good question. It depends. I would say if you're wanting to sell to grocery stores or markets, a market research project would be going to talk to those buyers and asking them all the same questions. So you might pick out 10 buyers and ask them, what's working, are they interested, what do they sell most? What do they sell least? Are they looking for a different vendor for a certain product? Find out their pain. And maybe that's something that that'll help inform you as to if you can help solve that pain. Those market buyers will tell you, you can ask them, are they interested in another farm wholesale order? And they might say, no, we've got everybody we need. We're not interested in anything else, except if you have this certain kind of radish. If you went to 5 different places, you might hear the similar thing, or you might hear 5 different answers. And you might, through that research, understand which are the best markets for you to cultivate or try to sell to. So again, talking to market buyers is a really good way to understand what's going on in the marketplace. Talking to consumers and CSA, to find out if there is interest for you to have CSA members. And you can do that by standing in front of the post office or going to the dump and talking to people who are coming in and just surveying people. Talking to them. You can do an online survey with a link and send that out through Facebook and have people, encourage them to fill that link out and ask us a couple questions. We're very successful with that. Another market research is to go to read newspapers and see if articles were written about trends. And the idea is to talk to people who have information that you don't have, so that you can expand your thinking about how to make these decisions. I could go on and on about this, but I don't know.
No, that's excellent.
Really good topic.
Yes. Thank you, Sarah, for that question. That was definitely a great question and a wonderful response. Going back to the cost of goods and that pie chart that you depicted in that last slide, question that comes from a person via the phone: if you have things like seeds and labor donated, how does that affect that cost of goods in reference to that pie chart that you've shown?
Oh, good question. I'm glad you asked that. So you might have gotten donated seeds this year, but next year you might have to pay for it. It's still a cost of your business. So you can make a decision that says, this year, I'm going to put in the cost of seeds so I understand what the real true cost is, and then have a thing at the bottom that notes that a certain amount of the value of that donation is, you can remove it. So you can offset it in your cost of goods, as long as you describe it and you're aware of it. Because if you don't include your seeds this year and you include everything else and you've got numbers, and then next year you have to buy the seeds and you compare the two time periods together, it's not going to be apples to apples, right? It's not.
Mm-hmm.
So it's just, I think it's in your, and also if you got free seeds and your costs are lower, then your price might come down. And then next year when you're paying for your seeds, your price is going to have to be a little higher. You've got other costs. So I like the idea of, even though it's free, just keep the cost in there as a decision, to help you with decisions.
Mm-hmm. And as a follow-up to that, this is probably more in line with organizations that are more nonprofit. If you are getting these things donated, how does that affect your assets and liability over time?
Well, I think it depends on, if you're getting inventory donated, there's still a value to that inventory that's an asset. It's still, you own it now. It's your asset. If somebody gave you a tractor, you didn't pay for it, but you own it. yours to do, there's a value there, and that's an asset. So it does go on your balance sheet.
Okay. Okay. And again, we have a little bit of time for a few more questions. And I thank everyone for sending in their questions. They are wonderful, and it really makes the minds think. Going back to market research, is there a way, based on what you've seen, where maybe focus groups could help, or sending out samples as a way of doing market research? Is that a doable model?
Absolutely, and I could have gone on and on about all those different methodologies. But yes, a focus group is really another important, but it's important to get different kinds of people. It depends on who your target market is. And if you have a specific target market, you want to have a focus group around that market. And if you've got a specific product, you want them to try it and give you feedback on it. So, getting outside of your little world helps you get information from different people, different demographics. Take your sample to buyers, and that's a focus group too. If they sample your product, the more information you have about customer response, the better you are in understanding who is your target customer and why they like your product, and what the benefits are once they experience your product or service. Okay.
All right. Thank you so much. And we have another wonderful question from Diane. Actually, it's two, and I think we can wrap up our presentation tonight with these two questions. She asked, what exactly does a bookkeeper do when they come to the business periodically to do the books? Are they considered an employee or a contractor?
Good question. They could be either one. It all depends. But many times they're a contractor as professional services. And, when they show up, they can do a variety of things. It depends on what works for you. Remember, it's your business, and you're trying to figure out what you need for support. Some bookkeepers will open up all the mail and sort it, bills and piles. Another bookkeeper might just come in and just pay bills because the owner has already inputted all the information into QuickBooks. Sometimes a bookkeeper might just put everything into QuickBooks, pay the bills, reconcile the statements, and then give the owner a profit and loss and a balance sheet and accounts payable and accounts receivable every Friday or twice a month. And then you've got the financial statements to then compare and analyze and see what happened in your business. It all depends on what you want to pay for and what you're willing to do or somebody else is willing to do to maintain the records in your business. There's no right or wrong answer on that one. But a bookkeeper is just also, they're not signing checks, you're signing the checks, but they're preparing the checks. And they're helping you manage the cash and the bills.
Okay. Wow, that is a powerful response to end our tonight's presentation on. And I want to thank everyone for all of their questions. Amy, thank you for this wonderful presentation, very timely to start off 2018 with our webinar series. And if you would like to see this presentation again, it will be up on the NOFA website. In the archive section, it'll take you right to the NOFA YouTube page. You should see it at the end of this week. Amy had her email address up. You can contact her directly if you want to find out when they're doing classes on financial statements and financial work, as well as some of the other organizations such as the Carrot Project, CISA. Please check those out. You can also email me directly at anna@nofamass.org, and I can get those contacts for you. Join us next month. I wish it was next week, but next month. Our presenter will be Derek Christensen. He is the owner and operator of Brooks Bounty Farm in Dartmouth, Massachusetts. He will be talking about soil testing as a means to determine your mineralization needs. And please note that particular webinar will actually start at 7:30 p.m. It's a little different than the 7 o'clock, so just wanted to make that note. Also, please be advised and put this on your calendar as a save the date. NOFA Summer Conference will be August 10th through 12th at Hampshire College. We're back home at Hampshire College. And so the registration, I believe, is open. You can go to our website again to check that out as well. Thanking everyone for taking the time out of their busy evening to join us on this wonderful presentation, and look forward to seeing and hearing you next month. Have a great night.
Thank you. Anna, are you still there? Whoa, whoa, whoa. No, no, no. Get out of this. Stop sharing.